Good evening and welcome to the Australian Stock Market Show. With the All Ordinaries Index weekly volatility dropping heavily last week, are buyers just taking a breather, or are the destabilising events globally causing caution amongst new buyers? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the world stock markets, and for our main topic in tonight's show, we'll get into will fossil fuel commodity stocks survive? The future of coal and gas in a clean energy world. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Woodside, Santos, Vulcan Energy, the major world stock markets, and more. So stay with us as we'll get into those soon. I'm Gillham, the Chief Analyst at Wealth Within, and I'm your host for tonight, and joining me are two of our team of highly experienced professional traders, Janine Cox and Philip Tordtevsky. Good evening, team. How are we tonight?
Good evening. Wonderful. Thanks. And yourself?
Me, I'm super fantastic.
I've put on my special voice for you tonight.
Oh, I'm not even going to ask what the special voice is, because I'm married. I know you're married too, so I'm not going to ask about that one. But the market is looking good, mate.
Oh yeah, market's good, and we've got a fantastic show tonight. It's all about volatility and some great stocks, so I'm looking forward to a good one tonight.
All right, well tonight, as mentioned, we get into major world markets, but first, let's take a look at this week's hot stock tip. Phil, what do you got for us?
All right, so tonight the hot stock tip is Regis Resources, stock ticker code RRL. So let's get straight into it. On your screen right now is themarketindex.com, and Regis Resources is a high margin gold producer and explorer. Now this one's been producing over the past decade consistently, and it has some performance metrics here. 2024 year to date positive 10% return. 1 year return of positive 47%. It is outperforming the sector by 45%, which is quite nice, and also the ASX 200 by 28%. It's got a market cap of 1.8 billion and ranked just outside the top 200, which is quite nice for these gold players, because you know when they do have that higher market cap, it also lends itself to the ability to be able to trade these stocks quite easily, which is very nice. But let's get to the chart, because that is the most important part right now. And I want to start off on the monthly chart with this one. Big picture first, obviously we've got this horizontal line marked here at $1.40. It's very clear that this is one of the most, if not the most significant level of support and resistance for this stock. It was acting as support back in 2004, but more recently you've seen it act as significant resistance during the 2014-15 period, and then again recently. And what's quite interesting with these two falls that have been, I guess, quite uniform with each other is back in 2012 the market fell at 81% before finding a base at this significant support at $1.40. And most recently, since the all-time high in 2019, we've seen again another 80% fall, pretty much exactly to that same level of support. And I've marked some arrows here to show that the market has bounced 3 occasions this time at 140, and guess what, it did a very similar thing, if not exactly the same thing, back in 2015. 3 exact bounces. Now I've marked a potential level of resistance at about $2.80, so long-term picture, it's up to you to think whether there is upside in a potential trading opportunity. But what I really wanted to show, because we have spoken on the show, Janine, you and I, about, you know, what's resistance? Is it an exact dollar or is it a roundabout figure? And I just
we've had some arguments about that, haven't
we?
we?
We've had some good discussions. I wouldn't say arguments, but what I wanted to highlight is a way you can look at this, you know, from a purely statistical point of view. And I've marked a level of $2.27 here. And as you see, as these stocks accumulate from September 2021, if you hover your eye through where I've got these arrows pointed, you can see that only on 4 occasions the market closed above $2.27, on 1 occasion before reversing away. So to me, just looking at all this price action going sideways, where is that limit to the upside that this stock has really failed? And it's at $2.27. Now what's very interesting, this week we're breaking through $2.27, but we're yet to close. Friday's still to come. So we're right now poised in such an interesting position for this stock because we're in this huge accumulation. We know that when it runs, it gets very, very volatile to the upside. It could provide you with huge potential. And we're right now closing above a level that it hasn't been able to close through. In fact, go on after a close since 2021. So make sure you're watching this stock right now.
You can take a breath now. That was really good. I just want to ask the question.
Yep.
If you look at that weekly close on the chart there, you can see that in the past it's done that before, but we had to wait for the following week to know if it was going to move on, and that's the same as this one, yeah. So, I mean, what do they do? Wait for next week?
So yes, it's wait for this week to see if it closes above $2.27, and then if it can continue on and close one more week above $2.27 the following week, then you've had something happen that hasn't been able to happen since October 2021.
Awesome.
Cool. Well, that is it for our weekly hot stock tip. Now, shortly we'll get into our topic for the night. Before we do, right now is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 for Melbourne 9290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So make sure you pick up your phone and dial 03 9290 9988. Now, while you do that, tonight we'll give you our thoughts on world stock market. So let's get into it.
On your screen right now is a watch list of the major world markets. Now, we can see there we've got the yearly data. Argentina's up 94%. That's just amazing, isn't it?
Again?
It's just incredible, yeah, again. So we're just miles, this particular market is just miles ahead of any other market out there, but more speculative in nature, obviously. For those of you who haven't put money into this market, you've got to be saying to yourself, well, the run's over, let's look somewhere else to see where the opportunities might lie. The Asian markets, I still think, have got plenty of opportunity. The Nikkei is up 18% for the year so far. Even the US market, we think, with the election coming up, that obviously creates volatility for the stock market, but usually a positive result until at least a year after the election. Spain up 17%, which is looking interesting. Not one we tend to focus on a lot, but it may be something of interest just to check the form of the way the Spanish market's unfolded can be a really important thing to do. I want to just come down a little bit further to the FTSE because that's the one that we're going to have a look at tonight. It's only up 7% so far, and if I compare it to Australia and the two markets have unfolded, there are some similarities in the way that these markets unfolded more recently, so we can have a look at that. Australian All Ordinaries up around 9% at the moment. The Dow's only up 14. It's not too much further ahead of us. It's just important to bear in mind that often the US market can fall around double what the Australian market can fall, depends on the type of pullback and where it is in the cycle. But that's all really interesting in itself. The one at the bottom of the market at the moment is Brazil, which is down 2.37% for the year. And look, the ones that have actually lagged like that and the CAC could be opportunities if you trade world markets.
So we're going to look at the FTSE?
I would love to do that. Do you want to?
I was just going to mention what's real interesting. I mean, we've spoken about how a 20% move generally signals a market is in bull market territory. Now, if you look at that list, there's almost 10 or more than half the list approaching 20% or over 20%. So you've got to think globally, I mean, that speaks bull market, right?
So the news globally doesn't match what the stock markets are doing. That's what you're telling me.
Well, kind of.
Exactly.
I knew you had it, didn't you?
Yeah.
Do you want to have a quick look at the FTSE then?
Okay, that'd be great. Okay, so if we're just looking at the chart there, we can see that similar to what the All Ords has done more recently since COVID, we've seen this rise up. Our market's been a little bit stronger than what this market's been, but the interesting thing is, and this is where you can actually learn to see how we're tracking relative to other countries, because obviously in a bull market, all these countries are going to rise, and in a bear market, most of the countries are going to fall to a heavy degree. But we're only just, if you look at this high here in May 2018, that prior peak there, the market's actually, prior to the COVID low, the pullback that occurred, you can see there that it's only up about 6%. So our market is actually well in front at the moment. So I'd say the FTSE's probably got a bit of catching up to do.
Yes, and the way it's presenting right now, especially on this, what are we on the monthly chart, the fact that it's, our market's obviously going up. Now this is kind of doing what our market did back during March, April-ish, where it was started to go sideways. So, I mean, the more it compresses, at some point it's going to break out, and if it's to the upside, you're going to get a nice run.
Yep.
Any last words, Janine?
Look, I'm pretty excited about how things are going on the markets overall, and I did a recording at the start of the month on the All Lords, so if you haven't seen that yet on our show, make sure you check out that episode.
Alrighty, well that is our thoughts on world markets. Now before we get into our first email, remember to get your questions answered live on air. You will need to call or text into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now let's get into our first question. Now, first email is from Dino. I'd love to hear about how you organise your trading process across different time cycles, daily, weekly, monthly, to help systematise an approach to stock analysis. I've been holding stocks for some time and done well, but now that I have some time off from full-time work, I'm diving into analysis and trading more actively. While I've had some success, thanks to your guidance and a few tips, I've tracked myself and I'm finding that my own stock selection process is a bit scattered. Do you want to take this one, Phil?
Yeah, sure.
Or do we handball it to Janine?
No, we can. I mean, we can both probably have a go at because our processes will be different, and that's the point. Every trader will have different processes based on their style of trading, what you're trying to get out of the market. Now, you mentioned you are dabbling a little bit in the short-term type stuff, and I mean, for me, the process every day was wake up, get to that screen at the same time every day, knowing beforehand that I'm, going to trade a certain instrument. It wasn't trying to find the instrument on that day, whereas you might be in a situation where you're looking at I guess you mentioned a bit scattered. So maybe the best thing to do would be to really hone in on your instruments that you are going to trade firstly, get that all sorted, and that way you know when you wake up every morning where you're headed, what you're looking at, what the play is going to be for the day, what the instrument is, and keep it regimented in that fashion.
Look, I think this is a common issue, so you're not alone. And I can recall that there were some people that I worked with years ago who used to look at too many stocks and had their field of view too widely spread. And it could mean about where you're up to as well. And just to simplify everything down could be what it requires for you. So it may just mean look at less stocks. I found that people working full time really couldn't handle more than 22 to 25 stocks if they're doing all the analysis properly and making sure that all the systems are in place. So it really depends on you. You might be able to do 100. I mean, some people do. But once you get all that analysis done, there's not much to do each week. Focus on the monthly chart to start with. Always have a checklist for that. Have a checklist for what you put on the weekly chart, and the daily chart was just there for depending on the time frame you're trading. But for most people, it's just there to have a check and see what's happening on a day-to-day basis.
Yeah, and I think obviously Janine and Phil have given you some advice there, but basically I think biggest piece of advice I can say is keep it simple, because if it gets too complex you won't be able to follow it anyway. But next we do have an email from Lawrence who says, absolutely love watching you guys on Talking Wealth, such great information and interviews. Can I please have your thoughts on NXT? Currently not in the stock, I'm waiting for the break of $18 mark or pull back to a monthly momentum line. What do you think, Janine?
Yeah, good stock choice, really nice big quality stock, so well done there. And look, I agree with you, it might pull back but then it might not. We're in a market right now that is bullish, and sometimes you'll be thinking it's going to pull back and then it takes off again. So just be ready. I like your entry level, I like the stock you've chosen, so 2 ticks from me.
What do you think, Phil?
I think if it's going to be anything, it potentially I would lean more to the short-term type play right now, given the way the stock is unfolding. Obviously, it's coming out of this huge month in February 2024, which kind of does resemble this extended type move before we saw a pullback back in December. If we were moving on, I guess, more of a gradient to this degree back in 2018, I'd say that there was potentially a bit more sustainability. But with that being said, at each time, even during 2018, once the pullback happened, it accumulated for a little while before making the next run up. We had an accumulation through here and then a pullback, and right now we're starting to see that again. So I think trying to take a long-term view at these levels right now would be potentially the wrong approach. But that said, I like the idea on the fact that you're waiting for the break above $18 because you're clearing a lot of that sideways choppy type action, and then you run a tight stop on it, or whichever stop you're looking to run. And
I mean, obviously, this stock is in data centers. So in terms of growth of AI, etc., and cloud, this thing's going to benefit from it. So for Web3, the whole bit, this is likely to benefit from all of that at the moment. So you are thinking this is just a pause before it starts to take up again, or are you thinking it's going to come back a bit?
Well, I think you've got to just wait for another couple of weeks to let the stock confirm that.
Okay, just caution.
Yeah, I'm always thinking risk-reward scenario first and foremost. And if you're not going to get as much as what you're risking with potentially the way that this stock is right now, that scenario looks like that is the case, then I would say wait for a better opportunity. If you're thinking long-term, if you're thinking short-term, medium-term, sure.
Okay, there you go. There you have it. Well, anyway, our next email comes from Dion. I have Dexus on my watch list and I'm waiting for price to break and test $8 and close above the downtrend line prior to entry. The intent is a medium-term trade with an initial price target of $11. Could I get your thoughts on this stock and the entry, please? What do you reckon, Phil?
Yeah, good stuff. Let's go to the chart and have a look for you. Dexus on your screen. We'll go to the weekly chart because we've marked up the break, if I can get my mouse cursor to work there. Break and test of $8. I really like that idea because you're coming into some serious resistance in December 2023 and January 24 with those 3 touches through that level. So we're on the weekly chart though, keep in mind, and there's also this big level where price was agreed upon at around $7, $8-ish. So I like the idea of not only the break, and this to me speaks of really the, I guess, level of where the trade is at, is because, you know, a lot of people look through getting in on breaks, but when you're waiting for a break and then a test, it speaks to being patient.
Yep.
And the fact that you're patient, waiting for things to line up, especially, you know, you've got the downtrend line as well that you are going to wait for, more often than not, being patient is going to pay.
Oh, absolutely.
I just really like the way that you talk about it, because, you know, you're more in the short term.
Me or Dion?
No, you.
Oh.
Because, you know, what you're adding to this, because you're talking more in the short term, generally in terms of the way that you're trading, but you're helping people look at this, and even you know, you're not trying to get in and eke out from the bottom and try to get the little bit off it, because there's a lot of short-term traders out there who do. They're trying to just sort of, you know, buy the bottom to try to and hope that it's going to go up. What you're saying is just be comfortable and wait for that confirmation. Wait for it to go through these levels. It's no rush.
Yeah, well, regardless of short, medium or long term, it's the safe trade that is always the takes precedence.
Yeah,
so,
that's great.
Yeah, good stuff.
Yep. Well, I mean, what you're talking about is the trade setup, which is the most important part. I mean, obviously, the email we had earlier about what's your process. The process is, if you get the setup right, everything else is easy. But what you're saying is most people don't get the setup right because they're trying to eke out little cents here and everything else. So having
and
the
look,
right
sometimes it can
process.
pay off. I mean, in COVID, you know, that after COVID, that worked perfectly because it was a
one in how many thousands of times it worked. So it doesn't.
But on
work
a
all the
stock
time.
like this, what's to say it could just easily bounce and turn around and go back down, couldn't
It's
it?
possibly, yeah, absolutely. So it's just being, obviously what Phil's saying, even though he's a short-term trader, he still thinks it's the same thing as a medium-term trader or a long-term trader. It doesn't change. So, and that's really a critical point that Janine was bringing up. But anyway, that is it for our take on Dexus. Now, with the movement to clean energy well underway, is there a place for gas and coal in tomorrow's world? This question is, or not only has implications for the future of energy, but think about all of the investment tied up into this space, especially stocks you might own, and are they still worth investing in? We'll discuss the future of fossil fuels shortly, and before we get into forecasts, let's get into the current state of the gas, coal and oil. Now I'm going to go to you, Janine.
Look, it's a bit of a mess, isn't it? People's bills have been going up, so they're paying more for energy, and people are looking at alternative forms of energy all the time. But I mean, I think it's a very disrupted market. I mean, on one hand, you've got government who are getting the taxes from these commodities, and on the other hand, they're being made to switch to something that's greener. So, you know, there's a big dichotomy or conflict of interest there, and that's probably got a lot to do with why these things take a lot longer than what some people might like.
Well, don't get me started on taxes, Janine. Definitely don't get me started on those anyway. But I totally agree with you. And you could even add to the geopolitical landscape or climate shifts recently, which haven't helped either, have they, Phil?
No, I mean, there's been a rise in outages of liquefied natural gas plants around the world, so that's been quite...
Serious?
Yeah, a new development that's been happening. Obviously, the cold winter, northern winter in Europe, which is, affecting the supply, the war in Russia affecting the supply through Europe, and now we have, the unclassified war in the Middle East, let's say.
The unclassified war.
Not yet, but kind of happening.
It's like the recession we're not having.
Yeah, so I mean, all of these things affect supply of, especially oil in the Middle East, gas in Europe, and so these things are having an effect which in previous times weren't.
Okay. So with all of that going on, how do the prices of gas and coal look at the moment? I'm going to go back to you again, Phil.
All right, that's a good question, Dale. Now let's go to the charts and have a look for you. We'll start off with the chart of, if we can go to the screen right now, natural gas. And I mean, very interesting and makes sense, right? Obviously, natural gas, I'll bring up the monthly chart because it has, as you can see, it's not one of those growth type stocks or instruments markets where you see, obviously.
It's a commodity.
It's a commodity. So stability is the importance there, like currencies as well to some degree. But you can see the level through here, $2.14 is literally the magnet that this the natural gas likes to gravitate back towards. If I can get my horizontal line through there, it's very evident, and we're coming back to those levels now, which is quite interesting. We've capitulated out of August 2022, finding our feet back here, and I mean, it's very safe to assume back at these levels there's only one place it's going,
up.
Right. And so what does that mean for your investments? Obviously, if you're trading in that natural gas space, could bode well for if you're in that play. But again, when we're talking about stocks and commodity related stuff, it's always important the stock-specific movements might not always reflect what's happening in the underlying commodity. So just keep that in mind.
But I mean, given what you just said a minute ago with the geopolitical events, and obviously if there's not gas going around Europe, I mean, we've got a shed load of it here. Why isn't the gas price going up? If there's been pipelines cut off, so to speak, and gas-fired power stations going down because they don't get any, we've got truckloads of it here. So why isn't the price of it going up?
Well, it's interesting. Yeah, it's interesting. It's just been stabilising sideways. So, I mean, really right now, it's again speaks to the point that sometimes what should happen doesn't always reflect.
Yeah, that's a really good point.
You see it so many times with different markets. But we can move on to the next one, which is coal. Which
Happy
Janine,
to do that.
You might want to have a look at that.
Yeah, when we had a look at this together, I thought, wow, look at this. You've this is perfect timing. You've wanted to look at this one. It's actually making a new high through here, short-term high. I'm going to expand it up, otherwise you might be saying, oh, Janine, I can't possibly see that in the background there. But we've still got some serious levels of resistance here, and I'm just going to grab a horizontal line and draw it across the top of this peak here, but we're still a fair way from that. But it's easy to say sitting here that, I think it's going to go to that level because there's another peak there. But at this stage, the fact that it's not really trending properly yet, it's still really in a sideways move. So until it gets through that level, we really would assume it's sideways, I'd suggest right now.
Well, to me, it's one of two things. I totally agree, but it's like, it's coming out of these falls in 2022. And the fact that it is going sideways, it's either accumulating or distributing. But what it's doing to me is there's indecision there now. It doesn't want to go higher, it doesn't want to go lower. And that could be the fact that obviously, there is that question around what is coal's future in the long run. Is it
uncertainty? Yeah.
Is it going to be there in the long run? I know we're going to get into some good stuff soon about why it might do, but all the argument about the renewables taking over, it's probably all the investors right now in coal thinking, well, hang on, let's see what happens here or get a bit more information before.
But again, you've got countries like China building more coal-fired power stations, so it's like, it's a bit confusing. So I can understand why investors are a bit confused at the moment, but we've got truckloads of coal too. But anyway, but what's important is where we're headed, like you were talking about then. So next we're going to take a look at this chart, which shows we are going to see global fossil fuel production peak globally by 2030. Now, there's no denying significant progress is being made to build the infrastructure needed to transition away from fossil fuels, but with estimates suggesting we're only 6 years away from peak production, the key challenges for government remain. Will renewables be ready in time? Now let's assume they manage to transition us on schedule. Are coal and gas worth investing in over the next few years? I'm going to go back to you on this one, Janine.
That depends on a lot of things. It depends on your personal perspective. If you take the moral ground that you don't want to invest in those sort of companies.
We're talking about coal and gas, about investing in, not moral grounds yet.
Well, look, we've got to look at all things
It's
because
about
investors
price. Is it
like
going up or down?
Well, investors like ESG investing. They want to ethical investing. So there's some investors that may not even invest in this space. But are they going up? That's what you're asking.
Are they worth
isn't it?
investing in? That's the question.
Well, not until either those charts show they're going up or the stocks actually are going in the right direction.
If charts start going up, then they're worth investing in.
If the prices go up, yes.
Yeah, okay. Anything you want to add, Phil?
I think there's...
Otherwise, we'll have another argument over here.
Yeah, I'm not going to talk about the morally stuff. I think they're definitely worth investing because we're going to talk about some things coming in terms of certain technologies that are going to keep the fossil fuels in play from my perspective anyway, because as we've seen with the renewables, there's one thing to say we're going to get to a certain marker in time. We consistently are falling behind this marker, and don't count out these companies because they are also making moves to transition to the new world. So,
well, you raised some such important points. And because one of the greatest investors in the world, we need to talk about him, Warren Buffett, has been investing heavily in fossil fuels recently. Yeah, you heard it right. In fact, to date, Chevron is one of Berkshire Hathaway's biggest holdings, $19 billion US to be exact, and Chevron recently cranked up oil and gas production by 12%, showing that they are buying into the fossil fuels are fading narrative. Now, Warren Buffett also recently built up a close to $15 billion holding in Occidental Petroleum and stated he would consider holding indefinitely. And so with moves like this, it's clear where Warren sits on the future of fossil fuels. But is there more to this play, Phil? I'm going to go back to you.
well, I'm glad you asked. And what I was talking about is it is about a specific technology called carbon capture technology.
Yep.
Now, it's something that is being worked on. It is being implemented by companies, but it's basically being able to produce energy through coal and gas. As we do now, the normal processes, but being able to eliminate the CO2 emissions, storing the nasties out of that production process. And if this technology is successful, that means that there is no reason why coal and gas needs to go away, because we're going to take away all the emissions from it. And we're going to get in, for our Talking Wealth viewers, we're going to get into detail in the bonus about stocks in this space and also what it actually represents. But from a simple perspective, it could be a huge game changer, and if Warren's betting on it, then I don't know, I think I'll go with him.
Well, that's probably a good point, but God invented the best carbon capture device on the planet. It's called a tree. I don't know why companies are trying to build another one.
That's true.
Just plant more trees, that's all I'm saying anyway, but great points, Phil. Now, time now to get into some stocks. Now, what have you got for us today, Janine?
Well, it's really exciting, actually. All the favourite ones that we like to talk about. So the first one up is Woodside.
Yes, and these stocks also, they are stocks that are transitioning to that greener pasture. So getting involved in solar, wind,
trees,
renewables.
greener pastures.
Greener trees, they're all the main.
Trees are a four-letter word too.
Look, I don't know. I'm not going to say too much, but I'm just going to say that sometimes it's a marketing campaign more than anything else, isn't it? Yeah. Look at the bottom line. Look at the dollars on the bottom line. Where are they getting their revenues from? All right.
Carbon credits.
Let's go back to the chart, shall we?
Okay, I'll shut up.
Woodside is investing in renewable energy projects, including hydrogen and solar, as Phil was saying. They're also exploring carbon capture and storage and technologies to reduce their carbon footprint. So if we look at the way that this stock has been unfolding, it's not looking too pretty right now for it in terms of the decline, but it could be at a really important point. And I'm just going to stop dancing around the page with the mouse and put some lines on there so you can see what I'm talking about. But we do have some important levels here. One is this level there, and the other one, I'll just take off this bottom there. We can see that the stock's actually stopped right at the level that it was trading at back in 2016. Some important levels, obviously over here, there's some serious support for the share price there, which becomes resistance going forward. So I'd really like to see it push up, get through this level somewhere around that $28, $29 mark to be on its way, because there's always the risk that it could come down to this low here in September 2021. If we look at where we can get a nice line down here, we can see that there probably is a trend line there, but obviously want to have a look at that. But a momentum line, but Phil, if you like,
Well, yeah, but I mean, if you're at
could be
long-term-
there.
Phil's
But it's got
momentum line are famous now. Everybody talks about
started out
someone.
as being yours.
Yeah, he steals everything.
But it's interesting because, you know, if there'll be a lot of investors in Woodside and probably holding it for the long term, and it's
Yeah.
nice to see that, hey, if you're in this company and worried about the fact that potentially this, you know, company could fade if it sticks to traditional, you know, fossil fuel type stuff, it's promising that they are venturing out and moving into the
I
new world.
guess all it would take is for the oil price to shoot up even higher. We're going to have a significant run, and that could change things.
Well, that, you know, that speaks to what happened with Rio as well. If we just go off topic, I mean, Arcadium Lithium, the stock was in free fall, and so was the lithium price was at all-time lows, and Rio goes and finds an opportunity. So, I mean, that could very similarly happen.
Well, you
here.
have to. These companies have to, because they're, you know, dirty, if that makes sense, if you know what I mean by Woodside or somebody that's mining oil, gas and petroleum. They're dirty companies, so they've got to shed their bets, don't they? So if this is going to go down, we've got to be over here as well. Otherwise, we won't have a company. So I think they're going to start doing a whole lot of takeovers in the next couple of years, I think.
Yeah, well, they have to, don't they? They have
We're
to
going to talk about that
They
later.
have to grow. They have to grow
Not
by
so much.
size in order to get, you know, the same sort of growth. If they can't get, if the price doesn't go up, what else can they do? So then we've got Santos. Santos is focusing on carbon capture and storage, and has committed to achieving net zero emissions by 2040. They're also investing in hydrogen projects, which is interesting. But, you know, as you can see, none of this news has really helped propel the share price forward. It's the oil price has been really held back. We've seen the gas price, Phil showed us that. But until, you know, it's all about money talks, isn't it? So until, it doesn't matter what they say, or whether someone likes the idea of something, or whether Warren Buffett's into it. It's all about what the stock's doing. So it continues to hit its head at these levels up here around the $8 mark. That's really the you know, stumbling block at the moment for Santos.
Yeah, a lot of indecision right now, and obviously range bound. If you're a, you know, short-term range type trader, you'd be loving this situation right now with Rio. But bigger picture, if we just zoom out on the monthly chart here, obviously.
With Santos.
Sorry, what did I say?
Rio.
Oh,
still
there you go. I've still got
Rio
Rio
on
on
your
my
mind.
mind.
Yeah, you still like Arcadium in your mind, don't you?
Yes, I do, 94%. Jeez. Anyway, yes, but stuck sideways, obviously at $8. To me, it's not such a bad occurrence what is going on right now. Obviously, if you're long term, you're probably a little bit frustrated, potentially collecting a yield, which is not so bad. But the fact that it's bounced off these lows at $2.50, you saw it come 2016, COVID. We've had 3 attempts at $2. What are we? $3, you call it. And it's found really strong support after coming out of one of the biggest falls it's had since 2008 GFC. So to me, that looks like a nice basing pattern. We've come up and now we're accumulating potentially sideways. So the longer this goes on, we saw this happen back in 2003, huge sideways and then a nice breakout of expansion. So I'm not hating this scenario right now for Santos. As long as it can start to break out to the upside, you're going to get some good trades when it gets back into trend.
So what do you need to see, like in terms of economically, or you want to see more transition into, you know, alternative energy sources, or what do you see? What's going to be there's always cause and effect. What's
Yeah,
gonna,
well,
what's
I would
gonna
look stock
cause it?
specific, to be honest. Really, if you want to see what's going on with the company, look at earnings, revenue, you know, debt, things like this to see the health of it. And if revenue's rising, earnings are rising, things are looking good, I would just say then you need to focus on the chart. And once you get to that chart, if we can break clearly above $8.30, even $9, get through that quite nicely, there's a big argument that we're back in trend.
Now, while we're on the chart, I want to bring this up because somebody commented the other day about, you know, I bought this stock at this price and it's up here. Why would you guys tell me to sell it? Type stuff. And it's like, well, this is a perfect example of you could be in a stock that's going up in price, but then spend 10 years or something going down and doing nothing.
Yeah.
So do you want to comment on that, Janine?
Yeah, I mean, first of all, we're not telling people necessarily to sell it. It's more, you know, about the risk decision, isn't it? So it's about the opportunity. You're saying it's an opportunity cost. If you continue to stay in a stock that's not moving after all this time, the risk is that it's more likely to fall than rise. And the opportunity cost is that you're not getting the stocks that are trending up. You're just stuck in a sideways move. We actually saw that with Wesfarmers. For years and years it went sideways, and that was really, you know, it was completely lethargic. The stock was range bound, and like Phil said, good for short-term traders, but not for the medium to long-term growth hunters out there.
Well, I don't know. I mean, when I've been posed that question by people, when they've come up to me and I go, well, do you like to own stocks going up or down? And they go up, and I go, so that answers the question, doesn't it? Why would you hold a stock going down if you don't like it? Just get out of it and go into stocks that are going up, because this chart just shows you that they can go down for multiple years and not a good position to be into. But we do need to get down to our next stock. So which one? What have we got?
Next, we've got Origin Energy. So with Origin, obviously, it is expanding again in renewables. I'll open up the monthly chart. It's including investments in wind and solar projects, which is a little different to the others. But again, they are exploring opportunities in green hydrogen. Hydrogen's one that's been
I like that area.
really making waves, or being spoken about a lot, actually. I saw the other day hydrogen car coming about Toyota. So.
Yeah, they've been around for years. They've just never been able to work it out properly as far as storage in the car and a few other things. But yeah, they're getting closer.
Throw your water bottle in the.
Well, sort of, but it's the reason why they like them is because you can just fill up at a petrol station, which means you can have unlimited kilometres basically again, whereas you don't have to sit there for hours charging your battery up. So going Melbourne to Sydney, it adds 2-3 hours to your trip, and that's more expensive in an EV car than in an ICE car. I think that's a pretty cool term, an ICE car, just a combustion engine. But anyway,
all right,
I distract you from your chart.
Let's go back to the chart, please. Origin Energy. Now, this one quite different to Santos right now in the fact that it is trending up. And I actually really like the chart, to be honest. I mean, we've bounced off again, similar to Santos 2016, 2020, a significant low around $4, really accumulated through the 2021 period. Now we've broken out into trend. Very clear and obvious to see. I'll just move this text here so I can really bring it up. But where are we right now, and where is the next opportunity? That's really the question. And what's quite nice is we're rising in a very sustained gradient of trend. We're coming out of a nice pullback recently in August, and right now there is an argument for an opportunity to trade this on the next leg up if it's going to continue this run up. Where there is likely resistance for this one, I am seeing potentially where it is right now, there is one particular level, and if we move on up a little further, there is another potential level of resistance. So very clear risk-reward type scenarios right now. If you can get through this $10.56 level, I think you got a nice little run up to about $14.
Yeah, I'm really liking that. I think it looks great, and I agree with what Phil's saying.
You serious?
Jeez, just let's move on, shall we?
You agree with Phil. You were arguing with him before. So nothing else to say on Origin Energy other than
no, just that
Phil
I like
was right.
it. I agree with the range and everything that he said. What can I say? I can't argue with him now.
I'll give you $50.
Phil's a genius. Stick with him. All right, let's go to the next stock.
Okay. BPT. BPT, this is a really volatile stock. One for people who like the volatility, good for short-term, medium-term trading, especially if you can get it on the run. But at the moment, it's definitely not on the run. It's really stuck. It's been range-bound again, but in a really volatile fashion. You can see across here there are a number of peaks. What I like about it is it's really easy to see where it's more likely to go if it does go up. Short term though, it really needs to have a couple of really strong months up, in my view, to just know that it's on its way again, because it could just as easily flip and take out that low and trade on the downside. But at the moment, I think it's just stuck where it is, but I'm liking it.
Phil?
Range trading opportunity. That's all I see right now with this one. Obviously, I mean, it's very obvious if we just bring that down a little to a $1.04, that has been such an important level, bouncing this stock up and down. But again, it's stuck sideways and potentially waiting for that next catalyst, whether it is the underlying commodity or something to change in this situation to get it cranking. Because
so, look, would you take a trade on that in right now?
Oh, look, it depends on the strategy. There's no confirmation really on, we're looking on the monthly chart right now, but if you were to really trade short term, potentially you could. But then again, the shorter you go in time frame, the more there is risk in terms of, that situation becoming a losing trade, because you're playing with much tighter volatility relative to how much volatility is in this stock. And really the skill level needs to be a lot higher. And then you've got to factor in, is it worth trying to get 5% out of this stock when it's probably going to cost you 1 or 2%?
Yeah, but your bottom line's roughly about $1, and the top of that line is about $1.80. So you can afford to give some money off the bottom and the top and still pick up 40 or 50% in it. if you've got the right strategy.
Absolutely.
If we look at the weekly chart to have a look at that, we can see there's no rule yet, but there could be.
Yeah. Yeah.
All right, let's move to the next chart.
All right, so next we have Ampol. Now, this one's very interesting. Obviously, it is transitioning towards a cleaner energy solutions by investing in electric vehicle charging infrastructure.
Oh, wow.
So all those very nice looking stations you're seeing, that's Ampol's fault. And investing in renewable fuels, which is quite interesting. But again, with these stocks, especially, I spoke a little bit on one of my podcasts about stocks now, again, off topic, that don't make money, but are in fields that, disruptive type technologies or fields that are going to be game changers moving forward. And, these ones potentially being up there with renewable fuels could, come out with something completely new and really ramp this stock up to brand new bull markets. But if we just go back to the chart and have a look, right now it is coming out of the all-time high, which is the level there in April 2024. It has pulled back quite a bit, but what it's doing, it's actually pulling back into this, I guess, congestion that it's been in for quite a while right now. And at the bottom end of this, we're probably sitting at around $28, $30. So there is one argument that it could find some support around here, but there isn't really, I guess, that real sustained nice higher highs, higher lows, trendy type move happening at the moment. It's really just fallen away, capitulated. So right now it's a case of waiting for that confirmation before you identify any real opportunities for this stock moving forward. I would say, it's a watch me right now and waiting for that real confirmation to get that higher base coming through.
So far, I'm not excited, mate.
No, it's not exciting. I'm trying to make stuff up with this one, but it's not that exciting, to be honest.
Give me an exciting stock, or give all of us an exciting stock.
All right, let's move on, shall we? Let's go to AGL Energy. How's that sound?
Well, sounds good.
All right, well, this one's focusing on renewable energy projects as well, including wind, solar and power. It's going to reduce its greenhouse gas emissions. But what's quite nice about this one is the fact that we are actually in a nice, I guess, medium to long-term uptrend. Yes, we've had a really healthy, clean, strong pullback, if you will, down to the $4 level. And right now it's a case of trying to identify confirmation out of these significant lows. And right now we've had literally from November 21 to August 24, the market hasn't taken out in 3 years these December lows. So you can make the case that this was a significant low, is a significant low for this stock. We are moving up. We're doing it uniformly through these higher highs and higher lows. Right now we're in the next expansion leg up. Just be careful, I would say, of the resistance up ahead through here. If it can clear its head through these August highs, I think there's potential upside to continue this long-term uptrend it's in.
All right, next stock, Janine. I like that one, so you got to top it.
Okay, VUL, I think it will top it.
Oh yeah, this is the best one.
Okay, Vulcan Energy is working towards becoming the world's first zero-carbon lithium producer for electric vehicle batteries by using geothermal energy. Now, we can see on the monthly chart, first of all, that it's had an incredible decline. So that, it spells opportunity right now if we're looking for something that's a bit more volatile. And down at the bottom here, 88% decline. It's just come up. We've had 3 or so months up and then a sideways consolidation, which is always nice to see, and a bit of a retest of that low. And some strength so far this month, but nothing conclusive if you're looking for a longer term opportunity. If you're looking for that, then you'd wait for this high to be taken out. But looking at the weekly chart, shorter term, we can see that it's already on its way, looking like it's moving. I'd wait for a strong close this week and see where it goes from there and set a tight stop loss if you've got a different time frame for your trade.
World's first.
If it's going to be disruptor, world's first, leading the world in a certain type of technology, I mean, with that tailwind, the stock can really go do huge numbers.
I like that they're using geothermal, which is great, and obviously lithium's not easy to mine either, so well done, guys. Well, thanks, Janine and Phil. Now stay with us, as we'll be right back after this short break. This week on Talking Wealth, turn your story into impact with Travis Bell.
There's so many lessons of people that have had the breakdown before breakthrough. Your mess, the lessons that you've learned coming out of that, like a phoenix from the fire, those lessons can really help people.
Think ethical resourcing is just a trend? Think again with Ronan Leonard.
There's a big workforce there of highly educated, well-driven, highly motivated and skilled people. So by paying them direct, you are having a huge impact on someone else. So we call it ethical resourcing.
Learn how to use AI for smarter trades with Andrew Einhorn.
When you look at the possibilities of AI, it will absolutely magnify our capabilities, and we see that day in, day out with what we see from the Level Fields platform.
Dale and I discuss whether Rio Tinto overpaid for Arcadium lithium.
A 10 or 20% tick up in lithium might actually pay that for that whole deal, and then throw on top it becoming a $10 billion annual industry. I think they've got themselves a bargain.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth.
That amazing content you just saw is going live this Thursday on Talking Wealth. Now, if you're not on watching Talking Wealth, you really are missing out. Now, moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 0392909988. That's 03 for Melbourne, 92909988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Now, Kieran is asking about the tax classification of an investor versus a trader. He asks, what do you feel is enough trades in a financial year to qualify to be a trader? Previously, I was taxed as a trader. However, my tax accountant then retired and a new accountant did my tax the following year and treated me as an investor. It came down to two different people's interpretation of the tax laws. This particular year, I had stopped trading for about 6 months so I could concentrate on finishing my diploma of share trading and investment with you guys, and only ended up with 12 trades in that year. This probably added to the reasoning. Now I'm going to go to you, Janine, on this one.
Look, the first thing that I would say is always...
Sack your accountant.
No.
Okay.
I would say consult the ATO website. It's the best place to go for any questions, and prepare yourself before you ask your accountant any question. Have a look on that website, and at least you go there well prepared. That's my contribution to helping you there.
I'm sure Phil can add to that.
Yeah, look, I've gone through the ATO website and sometimes end up more confused than with answers.
And you're a qualified accountant.
Yes, and I was a qualified accountant, but it really comes down to the distinction of whether you're carrying on the business of share trading, and the number of trades. I don't know if that is the.
I don't think it makes any difference. To me, and it's about intent.
Yeah,
it's not about how much you do. But I'll let you finish because you're the accountant, not me.
I was going to say that exact thing. It's really the intent of whether you're deemed carrying on the business of trading, and really all I can say is, like Dale said, if you're getting two different answers from different accountants, then that really tells you there is no solid, hard and fast rule, right? It's two different interpretations of your same situation. So find an accountant that's going to give you the one you want.
But I've also had accountants with people with self-managed super funds saying, oh, you can't trade that much in your super fund. Well, that's BS. There's no rules around how much you can buy and sell in a super fund.
Is that what they've said?
Yeah, I've had people say that, and it's like, no, it's just their personal interpretation. It's not in the Act. So that's really where you've got to look at it and say, and to me, it really is about your intent. So
some accountants say you can claim education, and some say you can't in your super fund.
Yeah, I know. So it's all different. So to me, if you've got a business plan and you give it to your accountant, and I mean a business plan by trading plan and strategy, so you have your strategy written out, your trading plan, and you hand it to them, your intent is to be a trader. So they need to treat you from a tax purposes as a trader. So, and like I said straight up, if your accountant won't do it what you want, get another accountant. But anyway, we now have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
It's Matt. How you going, guys?
Welcome to the show, Matt. What's your question for us?
I'm looking at Flight Centre. I've been looking at it for a while, being pretty patient. It's starting to make a nice little pattern and kind of accumulate a little bit. Looking at Phil's risk reward, I think there's a bit of resistance at 24.90, so that's only about 8% from where I've got a little buy entry at 23.06 if it passes through there. But I think I'd wait until after 24, a good close above 24.90.
Okay.
I just wondering what your guys' thoughts on it are.
I'm sure
Janine's
got. Yep. Yeah. Look, and the guys will have a look at it, but I'm sure Janine's got a lot to say about that. Not just Phil, but yeah, I think 8% looks a bit tight. But we'll flip it over to the guys and see what they say. Thanks, Matt, for calling in. So you want to go first, Janine?
First of all, Matt, he's a student of ours and great stock choice, and well done
Well, I
for
sort of
sticking
picked
at
that up
it.
in
I'm
what he was
really
talking
impressed
about.
with you. And looking at the stock choice, like the setup, and the fact that you're listening to Phil and his talk about risk and reward is great. So I'm just looking here and think, I see, this looks great. I agree with what he's doing.
Well, he's saying maybe because there's only 8% from his buy price to where it gets resistance. So does he wait to get over that before he then takes a buy? That's
it depends on the strategy, like the time frame that you're trading. If you're trading more short to medium term, the answer is going to be different than trading long term.
Risk reward, 8% upside, would you?
But it depends what's above that. Like, I'm not just looking at one level above that. I'm looking at what's above here. So it's more the big picture for me as well. So if it gets through 1, 2, 3 levels, and I go back on the weekly chart, I just have a look at where it's closed, right? Because it may not be the peak that's important, it might actually be the close that's important. So if I put a line across here on the weekly chart and I see that all the closes were around this level and that's actually there, then I'm not going to wait for it to get through that high. So that would be as simple as I would look at it.
Yeah, you just wait to get it. And Phil's nodding his head in agreement with you, so well done, Phil.
Yeah.
Well said, Phil. Okay. Now we have a text from Daryl who says, "Hi guys, I'm watching MMI for an entry when it can break and hold the 6-cent resistant level. It is technically in a long-term uptrend. It is a low-cap stock, I know, but I like the setup and the fundamentals. Could I get your thoughts on this for a medium to long-term trade? Thanks, Daryl." Going to go to you, Phil.
All right, yes, let's go to the chart, Daryl. Let's have a look on the monthly chart here for you first. And yeah, look, this stock obviously is, I like the fact that he is speaking about the fundamentals, having a look about the company, because you will often see companies, might be having a rough time of it and then they turn the corner, earnings start rising, revenue or things start changing, and you see the share price follow that or even lead that to some degree. And right now, obviously, it is bouncing off these 2014 lows. In fact, new all-time low, February 2023. It is making moves up, but it's doing it quite not very sharply like it was throughout this period here. So in one aspect, you're getting in at these levels, you're getting in before the euphoria, which is quite nice. But then you also need to factor in getting in at these levels. It could very well just be a short-term run up before the stock continues to fall away, given the very nature of the way this stock has fallen. But just analysing what's happened since February 2023, it's gone up, it's based higher, it's extended actually from the previous move again, and given us a higher base and now running up. I actually really quite like the setup happening right now, and if you can get above, as you said, that 6 cents, that's going to speak to that next leg up, and that might even be a further extended wave, really positioning you in a very good situation if you bought at 6 and the stock really blows off. And so I actually quite like what you're looking at and how you've done it there, Daryl, waiting for the 6 cents. Good job, mate.
There you go, Daryl. We got thumbs up from Phil. Now we got a text from Paula who says, "Good evening and thank you for a great show. Can I please have your view on GHY?" Paula saying, "I'm currently watching it for an entry point, but I would love to hear your thoughts. Should I wait to see if it finds resistance at $1 and then has a pullback? I'm looking for the short to medium term. Thanks, Paula." What do you reckon, Janine?
Well, that's a really good point that she's raised. So I can see she's really thinking about that dollar level. So for me, yes is the answer, but then it would depend on what else I could see on the chart. So that would be the first thing. So well done in picking it up. Let's just go and have a look at that, shall we? The other issue we've got here is this high here in December 2023. Somewhere around that level, it's around that dollar mark, will be important anyway, not just because the dollar is an important level I've raised in the past, but it's actually coinciding with natural resistance. So on that basis, it's even a stronger level for resistance than expected. But at the moment, we don't have any rules on the weekly chart. So that's the other thing against it, is you've got to have something strong on the weekly chart. And there's not enough history, Dale, on this stock to actually confirm that any strategy is going to really work over time.
Well, you look at it's gone up, looks like 100%. I don't have the amounts, but it looks like it's gone up 100%, and there's no pullback at the moment. So would you be looking at this at the moment, Phil?
Well, it's always lining up the buyer and seller relationship, isn't it? Exactly to what you're speaking to. If we just go back to the chart on the weekly, and if we are talking about that scenario, we're talking, well, the sellers have shown their hand from July 2024 all the way down to September. Buyers have come in over the last 4 or 5 weeks, and we're yet to rise half of what the sellers have produced. Now, if the next move by the sellers doesn't break through the low in September, then you've got a clue maybe the sellers are running out. So I would say wait to see what the next move is.
So you're being cautious, both of you.
Yeah.
Yeah, Janine's nodding her head, so she's agreeing with me finally. Anyway, the next question is from Will. I'd like your thoughts on Demerix, a small cap biotech for a medium term buy. It looks like it has just broken out of one of Phil's famous momentum lines from the June 2024 high and has seemingly found support on a momentum line from the October 2023 low. Okay, Phil, give us your momentum lines.
My momentum line is biotechs. You know, anything can happen with these stocks, right? For one announcement, and yes. But anyway, let's go to the chart and have a look for you about these famous momentum lines. And I can see exactly what you're seeing there. DXB obviously coming in, bouncing off the uptrend line on the 27th of September, and also breaking that momentum line in October 24. So right now, in terms of opportunity, yeah, it does look like it's turned the corner. It's giving real nice expansion with these bars here showing the buyers have arrived and, you know, wanting to go on with it. It would be nice in terms of confirmation to see how the sellers react, given, you know, we're still throughout this whole down move bouncing lower in terms of lower lows. So if we get to see a higher base, that would add even more confidence that the next leg is going to be attacking these highs up at 64 cents. But I mean, if we just zoom in on this monthly chart, you can see the real picture of these kinds of stocks. Where are we here? And, you know, for a very long time, we're on a monthly chart, and that just tells me the way these bars are unfolding that this is a very liquid stock. So that's the other overriding thing you need to consider if you're going to be trading here. Look at the depth of the market, see whether you're going to be able to transact with the liquidity, whether you can get in and out. What's the spread like? Is on one day the spread you know, hugely different to where you can get in and out, because that's going to affect your strategy regardless of how the stock's moving. You might wake up one morning and not be able to get out when you want, and what's the point of it going up?
Well, I agree with you there anyway. But now we have Brajesh asking about the value of market index analysis. He says, if I'm interested in buying any gold stocks, should I check if the gold index is also moving up, or do I just focus on the stock alone? Also, where can I find the sectors such as copper, lithium and AI so I can identify stocks to invest in? What do you reckon, Janine?
Well, look, for a start, I think it's good that he's put all that together.
So
thinking
stock,
about
or look at
gold.
the sectors as well, or just look at the stock?
Well, we've always said if you're looking at a stock, look at the underlying. So that's the first thing. Gold obviously has been up strongly. And at these sort of levels, you know, it's just a license to print money if the gold price stays up there. If it starts to fall back a lot, that's a different story. But if you're looking at the stocks, you've got a nice entry rule and the gold price is up nicely, then, you know, what's stopping you? That's really what you've got to ask yourself. But it's all about the stock itself. That's the first important thing.
I'm going to go to Phil now. So obviously that was the first part of the question,
Yep.
the stock, or look at the index and compare it all. So where does he find all that stuff?
Yeah, well, Market Index is a good website. You've got List Corp, which also is quite a nice website that you can go in and, you know, really breaks down each stock in individual sectors, industries as well. And then if he's got software like what we use, you know, Optima, maybe he could go on there. It's really structured well and placed for you to identify the stocks within each of those sectors. So
Well, I mean, Brajesh is a graduate of our diploma course, I believe. So I know in there, because it just depends on the data feeds you're getting. So you're probably going to have a data feed with some of that in there already, or most of that in there already. But just give them a ring. I would just say to do that. So that. Anything else you want to say?
No, that's it.
So well done, Brajesh. Now remember to show your support for our channel and smash that like button, and do it right now. And if you do enjoy watching and want to see loads more of our content, click subscribe as well while you're there. Now before we let you go, what was your favourite part of the show? Was it Phil's hot stock tip, our topic for the night, or was it one of our viewer questions? Let us know by commenting below this video on YouTube. Now thanks to all of those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies, because we'll be right back with all of that and more. Next week in our main topic, we get into iron ore. Set for a comeback? BHP, Rio Tinto, Fortescue and more in focus. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. If you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck and good trading.